Greetings and a warm welcome to the Manifested e-learning platform. Today we are going to continue with the subject Governance and Compliance Audit, the third chapter, which is Introduction to Governance and Compliance Audit. This chapter has 8 subtopics, namely 1. General Principles of Governance and Compliance Audit. 2. The nature and purpose of governance audit. 3. The nature and purpose of compliance audit. 4. Types and timing of governance and compliance audits. 5. Users of governance and compliance audit information and their respective needs. 6. Qualities of good governance and compliance audit. 7. The challenges of governance and compliance auditing. 8. Governance and compliance audit in the digital era. These are 8 subtopics we'll be studying subtopic at a time. We are going to begin with the general principles of governance and compliance audit. Now, in analyzing the principles of governance and compliance audit, we're going to separate the principles. First of all, we discuss the general principles applicable to both governance and compliance audits. Then we will analyze the specific principles applicable to compliance audit, then the specific principles applied or applicable to governance audit. So first of all, we will consider the general principles applicable to both governance and compliance audits. And candidates, governance and compliance audits are crucial for ensuring an organization operates effectively, ethically, and legally. And while the two are distinct, as we defined in our first lesson, they share many underlying principles that contribute to their effectiveness. So first of all, let's analyze the general principles applicable to both. General principles applicable to both compliance audits. We have the general principles that apply to both governance and compliance audits. Now, the first principle is a principle of independence. Auditors must be independent of the activities they are auditing in order to ensure objectivity and impartiality in their findings and conclusions. This means being free from any conflicts of interest and being free of any undue influence. For governance and compliance audits to be effective, the one who is carrying out the audit, the governance and compliance auditor, must be independent of the activities they are auditing. Because the governance auditor audits the corporate governance framework, and the compliance auditor audits the adherence of a company to laws and regulations. So if one was to audit effectively, then such an auditor ought to be independent of the activities that he or she is auditing. The auditor must also maintain independence of the management, and that's why in most cases, auditors are appointed by the shareholders and they report to the shareholders. And by the very fact that they are appointed and report to the shareholders, that gives them some level of independence. That makes them not to be influenced by the management. So that's the first principle, independence. Number 2, integrity is the second general principle applicable to both governance and compliance audits. Auditors should conduct their work with honesty, professionalism, and ethical conduct. And their credibility and the reliability of their reports depends on their unwavering integrity. So auditors ought to be honest, ought to be truthful, ought to be transparent, ought to be professional in their dealings. Objectivity. Objectivity is a third general principle. Auditors must maintain an unbiased mental attitude and avoid personal biases in evaluating information and formulating conclusions. And professional judgment and skepticism are crucial to ensure that the auditors are objective. You understand? They should be impartial. They should not take sides. They should not be partial. They should be unbiased. Do you understand? So that's the meaning of objectivity. Auditors are required to be competent and due professional care. Competence and due professional care. Auditors must possess the necessary knowledge, skills, and experience to conduct their audit effectively. An auditor ought to have knowledge. An auditor should have skills and also experience in order to conduct their work effectively. They should exercise diligence and professional care in planning, performing, and reporting on the audit. And that includes staying updated on relevant laws, regulations, and best practices. So an auditor should be competent, knowledgeable, skillful. You understand? Yes. That's a very important principle. Now, principle number 5 is that one of confidentiality. 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 Now, auditors often access sensitive information while carrying out their work. They must then maintain confidentiality of such information, only disclosing it when legally or professionally required. As an auditor, you will most likely come across sensitive information of the company that you are auditing, and therefore, as an auditor, you should not disclose such information to third parties without consent of your client. That is an important principle, confidentiality. The 6th principle that applies to both governance and compliance audit is planning. Planning is a principle. Okay? A well-defined audit plan is essential. Whether it is a plan for a governance audit or compliance audit, a well-defined audit plan is important, it is essential, it is necessary. And it involves understanding the entity, understanding the environment within which the entity operates, and also determining the audit objectives and scope. It involves also identifying subject matter and criteria. Planning involves assessing risks and also developing audit procedures. That applies to both governance and compliance audits. Planning. You understand? Yes. Another principle is audit evidence. Audit evidence applies to both audits. Auditors must gather sufficient, appropriate, and reliable audit evidence to support their findings and conclusions. And this evidence can be obtained through various procedures like inquiries, like inspection, like interviewing, and so on. You understand? Yes. Materiality. Materiality is a principle. Auditors consider the significance of matters to the intended users of the reports. Materiality helps determine the scope of the audit and also the extent of procedures to be performed. So these are just some of the key general principles that are applicable to both governance and compliance audits. Now let's analyze the principles that are applicable to governance audits. Specific principles for governance audits. Specific principles for governance audits. Now, governance audits focus on evaluating the effectiveness of an entity's corporate governance framework. That means the way in which entities or companies are managed and controlled. There is a way in which companies are managed and controlled. That's what we call corporate governance. So the corporate governance framework may also be audited, and when that happens, that's what we call governance audit. Governance audit is the auditing of the effectiveness or evaluating the effectiveness of an organization's governance framework. And there are key principles applicable to governance audits. The first principle is transparency. Transparency. Now, this means assessing whether the organization provides clear, timely, and accurate disclosure of information to all stakeholders, which may enable them make informed decisions and so on. Transparency. Number 2, accountability. Accountability. That means evaluating the effectiveness or the mechanisms, evaluating the mechanisms in place to ensure that individuals and groups within the organizations are held responsible for their decisions, actions, and outcomes. You understand? Then the third specific principle for governance audit is fairness or equity. Fairness or equity. This refers to reviewing whether all stakeholders are treated equitably and that policies and practices prevent conflicts of interest and undue influence. 4, responsibility. Responsibility. That is to mean assessing the organization's commitments to acting in the best interest of its stakeholders, including social and also environmental considerations, and also considering the long-term implications of its decisions. 5, ethical conduct. Ethical conduct means evaluating the presence and effectiveness of a strong ethical culture and code of conduct that guides decision making and behavior throughout the organization. Then we have board effectiveness. Board effectiveness refers to assessing the composition, structure, and performance of the board of directors, including their independence, oversight capabilities, and strategic direction. 7. Stakeholder engagement. Stakeholder engagement means reviewing how the organization identifies, understands, and responds to the needs and expectations of various stakeholders. So when carrying out a governance audit, this is a principle that will guide the governance auditor. The governance auditor is required to audit stakeholder engagement. Does the organization understand? First of all, does the organization identify? Does it have a mechanism of identifying stakeholders? Does the organization understand its stakeholders? And does it respond to the needs and expectations of the various stakeholders? So when carrying out governance audit, the auditor has to consider stakeholder engagement. The auditor is also required to consider board effectiveness. When auditing, carrying out a governance audit, the auditor should check the structure of the board. Is it properly structured? Is a board of directors properly structured? How about the composition? Does it have people of various diverse skills, diverse gender, diverse knowledge and experiences and expertise? So when carrying out governance audit, the effectiveness of the board has to be evaluated. And you evaluate the effectiveness of the board by assessing the composition, the structure of the board, the performance of the board of directors, including their independence, including their oversight capabilities, and their strategic direction. The auditor should be able to audit all that and give an opinion as to whether the board is effective or not. That is a principle. The auditor will also see that should audit the ethical conduct, should evaluate the presence and effectiveness of a strong ethical culture and a code of conduct that guides decision-making and behavior throughout the organization. First of all, does the organization have a code of ethics? Is it being adhered to? The governance auditor should be able to express an opinion on matters to do with ethics. So these are 7 specific principles for governance audits. Now let's analyze the specific principles for compliance audit. Specific principles for compliance audits. Now, compliance audits assess whether an organization adheres to applicable laws, regulations, internal policies, and including contracts. A compliance auditor evaluates whether an organization obeys rules, regulations, adheres to internal policies, and so on, including contractual agreements. You understand? Compliance auditor, repeat, assess whether an organization adheres to applicable laws, regulations, internal policies, and contracts. So the first key principle is adherence to authorities. Adherence to authorities. Adherence to authorities. The primary focus is on verifying conformity with specific external and internal rules, laws, regulations, policies, and procedures. That's the first principle. The second principle is completeness. 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 This is to mean ensuring that the audit considers all relevant laws, all relevant regulations, internal policies applicable to the audited subject matter. Completeness. Okay? Then we have regularity. Regularity. What does that mean? Now, regularity and propriety means assessing whether activities and transactions are in accordance with the formal criteria and generally accepted principles of sound management and conduct. Regularity and propriety. Let me add propriety and propriety. Regularity refers to the process of assessing whether activities and transactions are in accordance with the formal criteria. That's what we are referring to as regularity. That is a principle that guides the compliance auditor. The compliance auditor should check if the organization's activities and transactions are in accordance with the formal criteria. Propriety, on the other hand, refers to checking whether generally accepted principles of sound management and also conduct. Generally accepted principles of sound management and conduct are adhered to. Four, another principle is identifying deviations. A compliance auditor should identify deviations and violations. Deviations and violations. The audit aims to detect and report instances of non-compliance, allowing for corrective action and holding accountable those responsible. That is a principle in or for compliance audits. When a compliance auditor carries out his work, he's supposed to be on the lookout for any deviations or violations of non-compliance. You understand? Yes. Another principle is in line with the internal controls. Internal controls. The auditor evaluates the effectiveness of internal controls designed to ensure compliance with relevant authorities. You understand? We may even add preventing fines and penalties. Preventing fines and penalties. This may look like an objective, but it's also a principle, because a key objective in compliance audits is to identify and mitigate risks of non-compliance that could lead to legal action, that could lead to fines and reputational damage. So this is a principle of in compliance auditing, where the compliance auditor seeks to help the company prevent fines and penalties. So that's it, candidates, for the general principles of governance and compliance audits. And by adhering to these principles, governance and compliance audits provide valuable assurance to stakeholders. They promote good management practices. These can also help mitigate risks and enhance an organization's overall effectiveness and reputation. And that's it for today's lesson. Thank you. In our next session, we are going to study the nature and purpose of governance audits. Bye-bye.